All right, today we're jumping into a really fascinating analyst report that honestly reads more like a detective story. It's asking a massive question and then goes digging through 50 years of market history to find clues about where we might be headed right now.
So let's just get right to it. The report kicks off with this really provocative idea. What if the Korean stock market is in the middle of a massive bull run that's only happened twice, just 2 times, in the last 50 years? I mean, that's a huge claim, right? So let's play detective and look at the evidence.
And there it is, laid out plain and simple. The core idea is that we might be living through something truly historic. The only other times this kind of thing happened was way back in the late 80s, and then again in the mid-2000s. But to really understand why this claim is so bold, we first have to bust a really common myth about what actually makes markets go up.
Okay, first things first. We're all told that stock markets go up when companies make more money, right? Profits go up, stocks go up. Simple. But what if that's not the whole story? What if the biggest, most explosive rallies are actually driven by something else entirely? For our first piece of evidence, let's rewind the clock to that famous BRICS-era rally. Now, a lot of us remember this as a time when stocks just went nuts because corporate profits were booming, all thanks to growth in places like China. But the actual data tells a very, very different story. And here's where it gets weird. Look at this. The bar on the left, that's the KSOI index, and it's just shooting for the moon, a huge increase. But then you look at the bar on the right, the actual operating profits of those same companies, and they were basically flat. So if profits weren't pushing the market up, what on earth was?
The answer is this really key concept called valuation expansion. Basically, it's when investors all of a sudden decide they're willing to pay way more for the exact same amount of earnings. It's not about what a company did last quarter. It's about big picture stuff, global optimism, and just massive waves of international money pouring in. That's what fueled the BRICS rally.
Okay, so if the BRICS era isn't the perfect comparison, then what is? Well, this is where our detective story really kicks into high gear. The analysis points us even further back in time, to a period that it says is the true blueprint for what could be happening right now.
So here they are, our two historical cases on a timeline. The BRICS era, that was a 4 times gain for the market. Pretty great. But the 3 lows boom back in the 80s, that was an incredible 8-fold increase. And here's the crucial part of the argument. Today's environment, the report claims, looks a whole lot more like that second, much, much more powerful rally.
And boom, here it is. This is the secret recipe, the core finding of the entire report. Look, both rallies had a weak US dollar, which is like a magnet for global money, pushing up that valuation expansion we talked about. But, and this is the key, there was one critical difference: the price of oil. During the BRICS era, oil prices were high, which squeezed profits for Korean companies. But during the 3 lows boom, oil was cheap. And that meant you got the best of both worlds: rising valuations and soaring profits. That was the magic recipe.
Okay, so we've dug through the history, we've found the key ingredients for a massive rally. But why does a 40-year-old history lesson matter right now? Well, let's connect all those dots directly to the present day. And here's the punchline. According to this analysis, that incredibly powerful, incredibly rare combination, a weak dollar plus low oil prices, is happening again, right now, for the first time since that absolute monster rally in the late 1980s. It's like we're hearing an echo from 40 years ago. You know, the parallels don't just stop with the big economic picture. The analysis also finds that as these conditions have fallen into place, the actual behavior of the stock market, the patterns on the charts, has started to look uncannily similar to the way it did back in the 80s. All right, so we've gathered our clues, we've identified our prime historical precedent, and we've connected it to today. Now it's time for the grand finale of our investigation, solving the mystery and revealing what this incredible parallel could actually mean for the future. So if we run with this idea that the 3 lows boom is our map, then we can use its destination as a potential guide, right? And the analysis does exactly that, by looking at a metric called the price-to-book ratio, or PB. All that means is it compares a company's stock price to the actual value of its assets. A higher PB just means investors are feeling optimistic and willing to pay a premium. So historically, during these mega bull markets, that PB ratio has climbed way up. If that pattern holds true again, the analysis projects a potential long-term target for the Kospi's PB ratio of somewhere between 2.2 and 2.5. Now, this number itself is the foundation for the final big projection.
And here it is, the stunning conclusion. Based on that valuation target, you get a potential long-term Kospi target somewhere between 8,000 and 9,500 points. I mean, wow. It's a pretty dramatic destination when you follow the clues from history.
So what do we do with all this? Look, this isn't about having a crystal ball. It's about understanding the powerful story that the past can tell us. So let's just boil down the key lessons from our little investigation here.
Okay, here are the 4 big takeaways. First, the biggest market moves are driven by those huge macro forces, not just the latest earnings report. Second, that low dollar, low oil combo is like rocket fuel for the market, historically speaking. Third, history can give us a really useful map for navigating the present. And finally, and this one is super important, the report itself makes it clear this is a model, a way to think about things, not a guarantee of any kind.
So we'll end with this thought. We've just unpacked a really powerful historical model. The real question now is, what clues will you look for next? Are you going to be watching the dollar, keeping an eye on the price of oil? This analysis gives you a brand new lens to see the market story as it unfolds. Thanks for digging into this with me.